If you've ever gotten stopped out at the lows, you are probably being manipulated by a bank or an institution. Okay, these guys hunt your stop losses, they buy all your stop losses. And in this video, I'm going to show you how you can find where those stop losses are, and so you can trade with them. So you're not going to be getting stopped out at the lows anymore. So let me hop on the screen, show you exactly what I'm talking about, so you can go ahead and make money with the banks and with the institutions. We're looking at NQ futures right now. I'm going to show you a lot of different examples in this video, but for now, let's talk about stop hunts and liquidity and how that all works. So NQ, as you can see, it's a very easy trend in this current formation, right? You can see how they have very clearly marked highs and lows, right? We have a high, a low, high, low, etc. Okay. Liquidity, stop hunts, they're all going to be found at highs and lows. Okay. Particularly when you see relatively equal highs and lows, right? So if I zoom out, if I show you something like this, right? How price comes up, we have a low that forms right here, another low that forms right by it, right? And then another low that forms right by here, right? I just drew this line in so you guys can see it. When you see equal lows, they call it double bottoms, double tops, triple bottoms, anything like that. That's going to be liquidity. Okay, that's like a big fallacy that a lot of retail traders get wrong, is they think they see a double bottom and it means price is going to reverse up. Now, typically it can reverse up. We also have to understand that's where liquidity is going to be found. Okay, that's where there's going to be a bunch of stop losses in this area. And so if we know that there's a bunch of stop losses in that area, that's where banks are want to get filled. Okay, you got to understand this. If I am a fund, I'm an institution, and let's say I'm trading NQ, and I want to get filled 10,000 contracts. Okay, I'm not going to be able to do that, unless I just market buy and then I'm getting filled at crazy prices, right? That's not how you want to trade. So these institutions and market makers, they look for where they can find liquidity. Okay, where they can do that. And so, where could I get filled 10,000 shares? And down here is an area where that could possibly happen. How do we know that? Well, if there's a bunch of equal lows here, okay, a lot of retail traders, other funds, they're going to have their stop losses right below this low, okay? It's very common support resistance. A lot of people tend to have their stop losses right above certain highs or right below certain lows. So if we know that price, there's going to be a lot of stop losses below here, that means two things, right? If price comes down and takes out these lows, there's going to be a lot of stop losses triggering. So a lot of people are going to be selling. And that's where the institutions are going to get the liquidity to buy, right? All of those contracts that are being sold, somebody is going to be scooping that up in this area here, okay? Somebody or multiple players, whoever it is. And when you can understand this, you can start to make a lot of money from it, right? So as price comes down, takes us out, we come down, we touch demand, right? A lot of people are selling. You also have new retail traders who are also shorting in this area, right? They're, new retails, they're shorting. Again, somebody's buying this dip, scooping up as many contracts as they can, bringing it all the way up here, and then selling up these different highs, up at this liquidity level all the way up here, okay? Very simple. That's how the game is played. Now, how do we actually identify, equal highs, equal lows are good areas of liquidity, but how do we actually identify stop losses, things like that? And then lastly, how do we form a strategy around it, okay? Now, when it comes to the strategy, right, I use a simple three-phase system for all of my trades. And I actually made a free training that you can watch down below. I'll leave that in the description after this video. But besides that, let's go ahead and talk about how we can actually turn this into a trade. So if you look at NQ, for example, right, you can see here, again, liquidity is all going to be at highs and lows, okay? So if we know price is coming up to this high, okay, what happens? We take out this high by, just a few points, then we end up dumping right after, okay? This is a very classic move where a lot of people who were short, right, maybe they were shorting at this supply zone, right? Maybe they were shorting down here. Maybe they're already short from up here. They most likely have their stop loss above here. As you can see, price immediately tapped above it and then immediately dumped, okay? That's a classic stop hunt, right? So how do we actually trade this? Well, first thing's simple. You want to identify very clear pivot points or highs and lows on the chart, right? So we look at NQ, we can see this is a very clear low, right? This is another very clear low right here. This is a very clear high. And so when price comes up and takes out that high, we want to look for two things, okay? This is going to be extremely important, so make sure you're paying attention here, okay? What do we want to look for to help us confirm that price is going to stop hunt instead of just simply, squeeze higher, right? Well, the first thing is going to be volume, okay? Again, the whole point of stop hunts and institutions is they're looking where they can get filled with a lot of liquidity. They need a lot of contracts. They're trading with millions and millions of dollars, okay? So they need a lot of volume. Now, if we see on NQ right here, when price pushes up, we see a lot of increased volume in this area. Okay, when price goes up, takes this high, there is a lot of increased volume. So that's our first confirmation that, okay, price comes up, we take out this high, we see a lot of increased volume, and then we immediately dump right after, okay? You can see if we look at the volume in the next few hours, next few candles, it's a lot lower compared to all the way up here, okay? So that's our first sign is the volume. The next sign is simply going to be what happens, right? Does price immediately reverse or does price, end up squeezing higher? And you can typically figure this out within the first, depending on the time frame you're looking at, 30 minutes, 5 minutes, 1 minute, whatever it is, right? So if we look at NQ, maybe we'll zoom in on a 15-minute chart, right? We have this high marked, right? We know there's stops above this level. We know there's liquidity in this area. Does price, go through it, close above it, and just continue moving higher? Or does price wick through it and then immediately reverse? And here you can see it's very clear, even down to a 5-minute chart. We don't even get a 5-minute close above this level, right? Price immediately wicks through it, and we end up dumping right after, okay? And you see how we dump right after, that is your key to say, okay, there should have been buying through here, right? If we think about this logically, right? If price is making a new high, you're going to have new retail traders come into play, right? So a lot of new people, are going to be buying this breakout. You also have a lot of, shorts who are getting stopped out. And in order to stop out, you need to be buying. So if we have a lot of market buy orders happening at this area, price does not continue to move higher. That shows us that somebody is loading up short on the other side. And so if you understand this and you see that, okay, we have the increased volume, we take out the previous high, and we just immediately reverse, you can use that to your advantage and end up looking for a short position, right? Again, this is all very important that you need to use this with a strategy, right? So you could add something like maybe we break below demand, and then that's our confirmation to look for an entry, right? Maybe we, use a moving average. Whatever it is, you need a system that works, okay? And I do have a free training on my system if you want to watch that after this video. But I want to show you a few more examples, so stick with me for a second. So NQ, very simple. Let's look at a few other examples here. ES, same exact thing. Okay, we actually have a high here and a high here, so we have two of them. What does price do? Price ends up right at the open, so right when a lot of new traders, right at the market open, there's a lot of volume, a lot of new traders are coming in, taking a lot of trades. We whip up, hit both of these highs, can't get any momentum above it, and we end up dumping right after, right? Same thing on the low end on the other side, right? Price comes down, okay? We end up dumping right below this low. Everybody who's long is going to have their stop loss right below this low. We take out that low. We don't get any momentum, right? The trend is down, okay? We take out a new low, right? A lot of people are getting stopped out. So there's a lot of selling going on. But price doesn't continue going lower. Price just immediately goes the other way around. So that tells me that institutions were loading up down here, right? They were the ones that were holding the market up here, buying as many contracts as they can. And then what do? They take it right to the other side where they're selling other contracts and then getting short. It's as simple as that, right? If you can identify highs and lows and identify that, hey, price breaks this low, we have increased volume and we immediately reverse, that is most likely a stop on. You can very much so look to enter somewhere in this area and scalp a few points, okay? That's actually one of the strategies that I look for. But simply doing this, if you understand how highs and lows are made and where liquidity is, again, if we look right here, high here, high here, high here, high here. We got about 4 equal highs here, okay? 4 equal highs. So what does that mean? It means there's liquidity above this area, right? Everybody who's short in this entire zone is going to have their stop loss above this high, right? Not necessarily, but for the majority, right? That's typically how price works. And they push price up, get short through here, and then dump it. And then where are they taking profit? wherever there's more liquidity, as in wherever they can get filled. Okay. At the end of the day, if you just look at a chart, price always just goes up to new highs, new lows. That's all it is. It's breaking highs, breaking lows, breaking highs, breaking lows. That's all price does. Let me show you a few more examples. Take a look at eBay, right? I was just showing you futures. Let's take a look at some charts here. eBay, same exact thing, right? Price comes down, we hit a demand zone, we come up, where do we go? We take out this high, and we immediately dump the next day after, right? We see increased volume coming up to it, immediately dumps, and we end up coming back down. Where do we end up going? Right to the other low, another support area, right? Again, nice little support zone, whatever you want to call it. Price rises up, we take out a high, take that liquidity, immediately dump, right? If you wanted to, you could have got short on this pullback to supply up here, and then target the other side liquidity right here. Okay, price comes down, we take out a new low, right? Everybody who is long in this area, even like right here, you know, we have equal lows right here. Everyone who is long in this area, okay, is going to have their stop loss below here. We see the dump right to the stop loss, increased volume on this day. You can see we haven't had this high of a volume candle on the daily side for, you know, basically about a month, okay? So it shows there's a lot of increased volume. And then where do they go and take price? Right to the other side, okay? It's a constant back and forth of finding new highs and finding new lows. And if you use the confirmations of increased volume combined with that immediate reversal, you're going to get yourself on the right side of the market. And doing this as well, you're not going to be getting stopped out the lows anymore, right? You're not going to be putting your stop loss here because you're waiting for the stop hunt to happen, right? If you wait for the stop hunt to happen and then you look to get in long, and then put your stop loss under the stop hunt, right? Then you're going to see much better trading results, okay? Let me show you one more example on BAC. This one's huge. Look at this, okay? Price is in a downtrend. High or low, high, low, high, low, and we make a higher high after that, okay? What's happening here? What do we see? Okay, this is you can see the manipulation on this one very clearly, okay? Price moves up off this low. We have a nice demand zone. Price comes down right near it, okay? So in this area, right, it's a demand zone, right? So its price is lower. If we're talking about classic support resistance, a lot of people are probably buying in this area here, okay? We got earnings coming up. Maybe they think it's going to be good earnings. A lot of retail traders are buying in this area. Now, what happens? Price ends up breaking this low. Where do you think these guys have their stop loss? Right? Right below this low. Price ends up breaking this low. Excuse me, right here. Everyone who is long here, or maybe even longer term traders who are long in this area, right? They get stopped out. And so if they get stopped out, price is in a downtrend, you know, you would expect that more sellers would come in and they would drive price lower. That doesn't happen. Price immediately reverses. We see increased volume. And the cool thing about this as well is, what do we notice right here? Earnings, right? Right before a news event, they take price right below low, stop everyone out, right? All these guys are probably long for earnings, stop them out, and then they drive price up, use earnings to drive price all the way up, and then they're selling. Where are they selling? Right above all these highs, right above all this liquidity. And then you have retail chasing up here, they drop it back down, and the process repeats itself over and over. And you can see exactly how this works. If you're simply looking at highs and lows and paying attention to where retail traders are looking to get in, right? If you see those relatively equal lows, relatively equal highs, and you see that stop hunt with increased volume and that immediate reversal, if you take advantage of this, you're going to be putting your stops in a logical place, and you're going to be able to trade with the banks and with the institutions, okay? So if you guys did enjoy this video and you want to learn more about my free training, a little bit how I trade, my three-phase system, I made a free online trading video for you. First link in the description down below. Make sure you check that out. Please subscribe, leave a like. Okay, let me know other videos you want me to make. Comment down below, and I'll see you guys in the next video.